will be Infosys as well. Reema, the resignation that has come in just 2 days ahead of numbers, how should the street look at it?
Well, the street is surprised. So the news is that Infosys president Ravi Kumar S has resigned effective yesterday, which basically means no notice period, and the resignation comes just 2 days prior to the board meeting, which is scheduled tomorrow, where they will be considering earnings along with a buyback. So always there is going to be a key man risk, right? Because he was one of the important people, perhaps second or third in terms of the power ranking or in terms of, responsibilities, etc. But a company like Infosys is a well-oiled machine. So usually one exit, especially someone who's been with the company for 20 years, is unlikely to, really shake things up or result in significant business disruption. But there is always a key man risk, which is why we will be watching Infosys today.
How about HCL Tech comes out with numbers later in the evening? What to expect there?
So let me quickly run you through the expectations. Dollar revenue growth 1.5% quarter on quarter. Constant currency revenue growth should be between 2.5% to 3%, which means similar to the growth rate that it clocked last quarter. EBIT margins are seen expanding by 40 basis points to 17.4%. The reason we're not seeing a significant margin expansion this quarter is because of the wage hikes. The HCL Tech's wage hikes to its employees is effective 1st of July. Profit, according to our poll, should also show a muted jump of just about 4%. The key to track is going to be, does the company hold on to its FY23 guidance? Well, on the top line, the management has been very confident, and even the street is confident that HCL Tech will be able to deliver a 12 to 14% revenue growth. The question is on the margins. In April, the company said that FY23 margin guidance is 18 to 20%. In July, post Q1 numbers, the company said margins will be at the lower end of its guided band, which means closer to 18%. But the street is still not convinced. There are many estimates like Kotak and Ambit who have penciled in HCL Tech's FY23 margins below 18%. So is the management confident about meeting at least the lower end of its guided band? That's something that the street will be tracking very closely when it comes to HCL Tech.
Right, Reema, but we can't let you go just yet. Wipro is also reporting numbers. What should the street expect from that one?
Dollar revenue growth 2.4%, constant currency revenue growth of 4.2%, which is within the company's guided band of 3 to 5%. So no surprises, at least when it comes to revenues, and top line will be driven by some of the acquisitions that the company concluded. Again, in the case of Wipro as well, the margin expansion is fairly muted, just 15 basis points, and that's because Wipro doled out compensation and hikes to its employees effective 1st September. So there is that 1 month impact of wage hikes, which is why margin expansion, despite rupee benefit, increase in utilization, is fairly limited. Now again, even in the case of Wipro, the street is going to be watching out margin improvement from here on. They were confident last quarter that margins have bottomed out in Q1. But how much can it rise from here on? The company's medium-term margin guidance is 17 to 17.5%. How soon can they get to that? And secondly, Wipro also gives you a quarterly guidance. So next quarter's guidance will be very crucial. It's difficult to get a consensus this time because of how volatile the macro is. You've got Kotak on one hand penciling in 0 to 2%. You've got CLSA at 2 to 4%. So I think something in the middle should be, what the street is anticipating. And finally, acquisition that they did, Capco, has a great presence in Europe, and it also has a lot of consulting revenues, which typically get cut when things go tight. It's discretionary spending. So performance of Capco and outlook of Capco will be crucial. Back to you.
Okay, thanks a lot for that. Market